Hello everyone, welcome to Blue Dragon Actual. So today we have an interesting topic, and that topic is related to salary income versus business income. Since in actually we are too much focused about 1 crore salary, so I thought why not make a video on that. And for this, I have to do a lot of research. I have to go through a lot of articles, right? And that's where I think if you like this video do require a lot of likes from your side, so please not hesitate to hit the like button, right? So then that way it would go to multiple people. And also, if you are watching this video for the first time in my channel, so this is an actual channel where the focus is on concept, explaining concepts. That might be actual, that might be finance, slightly different sort of concept, and not on interviewing actuaries who have cleared 15 papers or how to clear 15 papers. So that is also one of the focus, but I mean that is not the primary focus. So if you are seeing this video for the first time, you can check out other videos where we have explained difficult concept in a simplified manner so that everyone can understand and everyone can see or visualize how difficult concept has to be tackled in actually, right? So moving on to the topic, salary income versus business income from actual standpoint, that is from risk management perspective, which one you should follow, right? So if we go into, and obviously the income tax etc., these are kind of part of SA2 or higher paper syllabus, and you have to kind of remember those. So all these are very important. It's not that it's a finance presentation, it's important from actual standpoint as well. So first of all, let us consider the income in individual income tax slab and what is as per the current setup. Also, budget is coming on 1st of Feb. Today is I think 26, 27, don't remember the date. So I mean, yeah. So this video might be later released at a later date, maybe on Sunday. But yeah. So I think this is very important that you understand the tax slab, right? I have seen and spoken with multiple people, even my colleagues, especially who are at senior level, they don't understand the tax calculation at all, right? And like most of the times they have a CA and they believe that I should not understand the tax calculation. It's like it's his job, CA's job, right? And what they do, that every January we need to submit the proofs, and they do not submit the proof. In the last 3 months, they get a lot of tax deducted, and they claim that through the ITR filing. And in doing that, you lose amount, lose the interest that you could have got uh, have you filed your tax or submitted your the proof on Jan. So this is something that I've seen traditionally, not in one company that I worked till now. I have seen a person who is very familiar with the income tax, especially the individual income tax. So moving on, individual income tax. But before we go on, just wanted to highlight that usually we'll file ITR one, or income tax return one, right, for salaried individuals. But if you are kind of, because I also have another YouTube channel called Blue Dragon Trading, where I deal with the stocks market and stocks, movement, future option, derivative, etc. So that need to be filed in ITR 3. So ITR 3 is the most comprehensive ITR. And for that, it traditionally picks five sources of income. One is salary, second is your business income, third is your dividend income, fourth is your interest income, and I think fifth is your speculative income, which is the income from the stocks and shares. I think these are the five sources of income that you can have, and you need to kind of file ITR 3. ITR 1 would not work. A lot of times I have heard this question, like what you need to do. So filing ITR 3 is a much more difficult process. In fact, sometimes because future option income is kind of treated as business income, it might require to be audited by a CA, especially if you are kind of having loss. So there are there are a lot of complications there. The advantage of that is once you start dealing in stock market and future options etc., you get to know a lot about income tax, especially the individual income tax, business income tax. So you get to know a lot, right? And that can augment your planning process, how to maybe work or how to save your tax. Anyways, today's topic would not be on that, right? It will be too complicated if I go into that. So this will be a more simplified presentation where we'll consider income from the angle of tax, and we'll see how we can have, which source will give us better income, right? So moving on. First is, if your age group is below 60, I believe most of the people who are watching this video, they would be lying in that range. So there are two income tax regime. We are all aware of that, right? One was introduced, I think, last to last year budget, right? So that is the new tax regime, which you can see here. Now this new tax regime, there is no deduction available, like you cannot claim benefit for life insurance premium that you pay, or medical premium that you pay. Those are not there. So these are just simplified, and up to 2,50,000 there is no tax. Then 2,50,000 to 5 lakh there is 5%, right? And 5 lakh to 7 lakh 50,000 there is 12,500. So in this way, the and 10% over 5 lakh. So the tax that are deducted. So for, if your income falls between 2 lakh, suppose your income is 7 lakh. So between 2 lakh 50,000 to 5 lakh, that would be approximately 2 lakh 50,000. That 2 lakh 50,000 will be taxed at 5%, and remaining 2 lakh would be taxed at 10%, right? This is what. So it is not that if your income falls between 7 lakh, it will be charged, like you will be taxed 10%. It is not like that. It's an incremental tax system, right? So if your the moment your income falls in this slab, it will be charged at that slab. The remaining income will be charged in the other slab, and that's what you can see, 12,500. That's because 2,50,000 into 5%, 12,500, and then in this way it will continue. So I mean, there is no point in explaining and going through each of this bracket. Like, we understand that if you are opting for new regime, which I personally believe is useless, you should not do that, right? Because you need to claim the exemptions, and this is for someone who is just starting their career. And I think otherwise there is no need. In fact, the person who is just starting their career, that person should need to learn about investment. And I mean, there are other deductions. So I don't think new tax regime, this was an useless thing that was introduced by the government, as per me. There might be some difference in opinion there. What we usually do is the existing tax regime, where up to 2 lakh there is no income tax. 2 lakh 5,000 to 5 lakh there would be 5%. Once again, 5 lakh to 10 lakh there will be 20%, right? And above 10 lakh is 30%. However, if your income lies, like, there is deduction, which is ATC deduction. You can 1 lakh 50,000 you can deduct, right? And after, there might be other, like 80D deduction as well, where your medical insurance premium can be deducted. So after all those deduction, if your income is lower than 5 lakh, like your final taxable salary, then you need not pay any tax. This is as per 87A. And the reason it is done is because if there are too many people in India who lies in this range, and if all of them started filing the income tax return, then it is in fact difficult for the government to track those, and it is more expensive for the government. So by that logic, section 87A shows that if you, after the deduction and everything, if your income tax is below 5,000, and I think there is a clause as well, that if your tax is coming out to be 2,000, 2,000 or 2,000, more than 2,000 or more, and your income, the taxable income is less than 5,000, then there is no need for you to pay tax. That is just for the government to save the time and expense. However, if your income is even 1 rupee more than 5 lakh, then you need to pay the income tax, and that would come through this level. Moving on, if your age group is 60 plus, that is senior citizen. So I think this thing, you can see the new tax regime. I think, those are kind of more or less similar. But in this case, the bracket shifts, like from 3 lakh to 5 lakh. Earlier it was 2 lakh 50,000. Now it is 3 lakh. 3 lakh, 5 lakh to 10 lakh is the same 20%, and 10 lakh and above is 30%. Once again, that same thing applies. Section 87A, which means that if your income is less than 5 lakh after all the deduction, then there is no need for you to pay the tax. Finally, the super senior citizen, right? So in this case, the tax slab changes here, 5 lakh to 10 lakh, right? And up to 5 lakh, there is no, so here it is directly stated, there is no other section that is required, right? So it is kind of directly stated that you are not required to do that, and above 10 lakh, it is 30%. And this thing is normal, and it continues like that. I mean, nobody uses this, I think. So this section is not required in this case, because it's straight away given that up to 5 lakhs, it is nil, right? So other than tax, there are a few more important things that we do not pay any attention to, which is surcharge and cess. So what are surcharge and cess? So surcharge is something that is paid over the tax. So suppose your tax is 100 rupees, and whatever the surcharge, maybe your surcharge is 10%, so you have to pay additional surcharge over the tax, like 100 into 10%. It is surcharge is not paid over the income, but it is paid over the tax, so it increases the tax, right? So that's what surcharge is. And cess, the government charges cess for health and education, that has to be paid by the corporate as well as the employees. So this is something that is that the government is charging, and they use this income to pay the midday meals for the student, and providing many health benefits, etc., to poor people. So that's how these are kind of charged. So cess is fixed, as you can see it's written here. Cess is fixed tax. Surcharge is variable and levied upon a specific set of citizens. Who are those citizens? Like, it will see that it will depend on their income levels. Up to 50 lakhs there is no surcharge. Our more than 50 lakhs income yearly, I'm talking about yearly income, obviously then there will be different surcharges that will apply. So this is what the surcharge is. So for individual, we are concentrating on the individual person only, right? Or this is Hindu Unified Family, etc. So if it is less than 50 lakh, right, it is nil. So the actuaries who are very concentrated about getting to that 1 crore package, you will be charged additional 10% surcharge, right? And if you are somewhere beyond 1 crore, then it will be 15% surcharge. As I mentioned, surcharge is calculated over the tax, not over the income. So that will increase this. And cess is calculated over the tax plus surcharge. So cess increases the, so you can see like first there is income, from income tax is calculated, from tax the surcharge is calculated, from tax and surcharge the cess is calculated. So that's how it kind of goes through. And you can see this between 2 crore and 5 crore. So this also increases your tax liability, right? I'll call this a different, like, tax increaser. So it is a different type of tax only. And for sales, as I mentioned, this is a flat 4%. This applies for the corporates as well, or the companies as well. This is a flat 4%. It applies for everyone, the individuals, the corporates, etc. So this also increases our charge, right? So effectively, suppose someone is getting a salary of 25 lakhs, 30 lakhs, right? Which you can expect once you are, maybe if you are in actuarial field and you are, maybe you have cleared 10 11 papers, so your salary would be somewhere in that range, 25 30. These days the salary has increased. So you have to pay 30% tax, right? And 30% will not be flat 30%, so it would be 5% from, for the first 2.5 to 5 lakhs it will be 5%, and then 5 to 10 lakhs will be 20%. So in this way it will increase. So you will have to pay that but your final portion of the salary will be, or income would be charged at 30%. Over that you have to pay a surcharge of here there is no surcharge, right? But you have to pay the cess, right? You have to pay the cess is permanent. But if your salary goes more than 50 lakhs, right, if you are quite experienced actually, etc., then you have to pay this surcharge as well. So you can understand that salary income is getting, it's like, it's, you are getting the income and you have to pay several lot of taxes on that, right? It's almost like your money is not your money. It's it's government's money, right? Like, there is that famous movie dialogue, or not that famous movie, that was a flop movie, but there was a dialogue that your business is your business and my business is my business, something like that. But in this case, your income is government's income only. So the more you earn, the more you pay income tax to the government. Moving on. So sorry, I think I repeat the same. Yeah, salary structure. So the salary structure, first of all, you will get basic salary that increases. So this is what increases your income. That's why there is the green base salary. Then HRA once again increases your income. It is also an allowance, and I've mentioned it separately because HRA is something that is very important. A lot of people claim tax. In fact, I have seen people who not, HRA can only be availed if you are maybe if you're staying in a rented apartment, like I do. I stay in Gurgaon in a rented apartment, but I have seen people who are claiming HRA, although stay in the same, like they are not paying rent actually, and they pay the rent to their mom, their grandmother, their grandfather, people who are not even in existence right now. So and that's because over a limit of 8 lakh, I think 8 lakh 3,033, over that is 1 lakh of monthly yearly rent. If your rent crosses that amount, you have to submit the PAN card, and that's why they pay the rent to those people. And the argument that is given is we contribute salary to the betterment of our family, so that's why we are claiming tax benefit. That is a faulty argument. You cannot do that. And although individual taxpayers are usually not touched upon by the government because they are treated as a vote bank, and there are several there are very few people who would be paying huge sums of tax so that the government would be bothered about that. And also everything is white for individual people. But the moment they start finding this sort of people and they try investigation, all those people would be under a tremendous amount of trouble, because you cannot pay HRA. You have to stay in a rented apartment. That logic that I am paying HRA to my mom because I contribute in the family expense, that is illogical and that is not correct. But I mean, I've seen many people do that, and I am not judging anyone. It's their choice, their life. They should be aware of the risk. As actuaries, we should be aware of the risk. Moving on, other allowance like telephone allowance, LTA, driver allowance, education allowance. There's so many allowances, right? So it depends on the salary structure that the HR of the company has provided, and this the company is like education allowance has to be there. HR has to be there, but remaining allowance, the HR can be crafty in creating those. And if you can probably claim tax benefit, as for example, if there is a communication allowance or telephone allowance, then you can show that you are paying for the internet bill. If the internet bill is in your name, then you can claim that, right? So that would not be part of your in-hand salary, but whenever you are claiming, you will get that as part of the salary, right? That will be additional part of the salary. And if you have not claimed in the entire financial year on the month of March, you will get all that salary with the tax deducted. So then that would be treated as a taxable income. Otherwise, it would not be treated as a taxable income. Depending on the bills that you have submitted, it would be coming to you, right? As for example, I claim communication allowance as non-taxable salary because I can claim my internet benefit, and because of that, I have to submit internet bills, right? And there is a limit for that, like your a salary should shows maybe 2000 rupees is your monthly communication allowance, right? So if your internet bill is more than 2000, maybe 3000 rupees, then you'll only claim benefit up to 2000 only, right? So I have to file that in February. I have not done that till now. A bonus, because that this would be charged depending on your income level, and taxed depending on your income level. And I think that we always, that's in some companies we get bonus for passing the exam, which will be one time bonus. Some companies will get a variable bonus, which is the end of the year of the bonus, depending on the company's performance and your performance, the rating that you got, right? So that is also there. And something which is special for the actual student is actual increments, right? So it depends on how you have got the bonus, whether your salary has increased. Many companies these days have moved away from that salary increase thing, and they are giving one time bonus. So that would also come and increase your salary, right? But that is not applicable to everyone. That's why I highlighted in a different color. So from this, the professional tax get deducted. Now, professional tax depends on the city that you are working in. Usually, we work in the metros where professional tax is applicable is with 200, 300 rupees. So that is getting deducted. EPF, right? So EPF would be your employee provident fund. Employee provident fund would also have some contribution for the pension. So that would be deducted, right? And finally, the tax would be deducted. So after all of this deduction, you will get your take home package, right? That is your take home salary. Your CTC might be say 10 lakh rupees, but your take home salary, if you have not maybe controlled your tax, might be only be 4 lakh rupees because of the deduction. I'm just giving a random figure, right? That would be too much of a deduction if you 10 lakh become 4 lakh, but just giving a random figure. However, what is important to see here is first your salary come, right? Then the tax is deducted from your salary. So this is your income, right? From the income the tax is deducted and then you get the salary, which will be a different thing for corporate. And that's why corporate or maybe forming a company is maybe a good option. So two things that we have to remember from this discussion, the discussion till now is, if you are maybe getting a 30 lakhs package, you will be taxed at highest rate, right? One of the portion of that income will be taxed at highest rate. And also that salary that you are getting, right, that would be the first the salary tax is deducted, like this we call this TDS. tax deducted at source. So from your source, the tax is first deducted, then you are getting salary. And if we compare this with the indirect tax that we pay, we purchase a toothpaste, there will be tax. We purchase maybe a phone, a laptop, TV, there will be a lot of indirect tax, right? These days, the government is trying to bring indirect taxes under GST, but different rates apply. You order food from Zomato, there will be indirect tax, right? Service charge, etc. So all this we have to pay. So if we see the amount of tax that you have to pay for a salaried individual is literally huge, because first your salary is paying the tax, then you are getting the income, and from that also you are, whenever you are purchasing something, you have to pay indirect tax, right? So as I mentioned, your money is not your money, your money is government's money, right? So that's the important thing. Now moving on, company income tax slab, right? So company income tax, now there are a couple of companies. One is proprietorship. I hope that you have read that in CT2 or CV1, I think. Right. So proprietorship means that there are several partners who are starting a venture, and if anything, like if that company owes money to someone, then even the personal asset of the partners can be accessed and taken out. But what usually the people do is limited liability. So that means only the asset that is for that company, same structure, the structure is same as partnership, but only the asset that is for the company, for the LLP company, that can be accessed, or that can be taken out if something happens, something bad happens for the company. But the owner or the founder personal asset cannot be touched, right? So usually when people register a company, people register the company through LLP. Otherwise there is need to pay the provident fund and employee provident fund and several other things. So you need a proper setup, right? So usually do not people do not register through private company limited. We'll see the private company slab as well. So LLP is tax flat at a rate of 30%, right? So which means that if you are starting maybe a company, and your salary income would be taxed at different branches or different sub levels, but if you are starting LLP, it will be taxed at flat at 30%, right? And over and above this, there will be surcharge, which will be 12% of such tax. So in fact, you are much worse off if you are starting an LLP company, right? Because there is no point. You could have probably continued with the job, and you would have paid much less, right? But in this case, you have to pay 12% tax, but obviously that's surcharge is applicable only when your total income exceeds 1 crore rupees, right? So that's how the tax is calculated in LLP, which is not a good thing at all. Moving on, now companies which are public and private limited, right? So here the tax rate depend on the turnover. Turnover means the gross sales or whatever business the company has generated, right? So if you are a domestic company with a turnover up to 250 crore, then the tax rate will be 25%. That's how I remember it, 250, 25%. Domestic company with turnover over rupees 250 crore, then it is 30%, right? It is same as the LLP one, right? But in LLP, it depends on the income, but here it depends on the sales, right? Income we have not even considered right now, and if you're a foreign company, then there is 40% tax, right? So surcharge on the net income up to less than 1 crore. So from revenue, you deduct we'll see that, but you deduct the expense, the depreciation, the interest, and then there are several other things as well, right? Without complicating that. So you get the revenue, from there you deduct something, then you will get to the net income, right? And if your net income is less than 1 crore, then the tax is nil. Sorry, the surcharge is nil. There is no surcharge, right? However, if it is between 1 crore to 10 crore, then you will pay 7% of the surcharge. And if your net income is exceeding 10 crore, then you will have to pay 12% of the surcharge. For the foreign company, it is much less, 2% and 5%. But for the domestic company, this is how it is, right? And obviously there are, like, I'm not going to go into those details, but there are many deductions like ATC, ATD that is applicable for the individual. The company can also claim several deductions. So in your individual case, what was happening is you are getting the salary, right? And from there the tax was first deducted. But in this case, you are getting the income, from which the expense will be deducted, the depreciation will be deducted, the income would be deducted, after which you are going to pay the tax, right? And obviously the cess, as I mentioned, is 4%, is constant, and the corporates also have to pay the same amount of cess, right? So moving on, this is what I was talking about. This is the difference, the sales or the turnover, from which there can be other earnings like dividend earnings, right? So, and there can be interest earned from that if you have put any loan, out of which this would be deducted, expense would be deducted, like your the wages, the internet expense, as I mentioned. If you are traveling for a business, that would be deducted, right? Your company running cost, all of those expenses would be deducted. In fact, the fusion option income in derivatives in stock market, that is treated as a business income. So the brokerages and the STT, the different charges that is there, brokerage and charges, all those are deducted as expense. So you need not pay tax on those, because the idea is that you have already paid those taxes to the government before. So you cannot, you there is no need for you to pay the tax, right? Because future option income is charged at, treated as business income. Expense, depreciation, interest, and all of those are first deducted, and then you arrived at the profit before tax. See the difference, right? Earlier you are paying the tax just when you are paying the tax as source. Here, from the source there is so much deduction. So you are, maybe you are getting 1 crore rupees here, but after all this deduction, it might be less than zero. It might be negative. In that case, there is loss, and you do not have to pay the tax, right? Or it might be very less. From 1 crore, it might be 10 lakh, and you are paying tax on 10 lakh rupees only instead of paying the tax on 1 crore rupees, right? So what it means is, first expense and other outgoes are deducted, and then income is calculated, which is the reverse when you are getting the salary. This is where the difference lies, right? This is where people who does business and does profitable business lives a much more better life as compared to a person who is probably earning the same thing, because the tax they are paying, the tax the salaried individual is paying, is way higher as compared to the tax a business is paying. However however the government is also very very clever, right? Like it's mentioned here, very chalak bro, right? So government is also chalak. So because of that, there might be like companies who are showing negative profit, although they are paying huge amount of dividends to the shareholder through different methods, but they are showing that they are not making profit, they're making loss, or they are making very very less profit, right? So for that, the government has introduced this, which is called MAT, or called minimum alternate tax. So what it means is, there would be a profit that would be calculated, and if the profit is calculated, then you need to pay around, I think right now the rate is 15%. So you have to pay 15%. You cannot say that, yeah, my revenue is 10 crore, but after deducting everything it is zero. So in that way, I do not have to pay any tax. So that is not possible. Even after those deductions, your profit will be calculated on something else. I will see that what that something else is, and depending on that something else, you have to pay 15% of the tax. That's why it is called minimum alternate tax. If your tax obviously is more than MAT, then you need not pay this, right? So it's either MAT or the total profit and the total tax, and the tax bracket we have just seen. And one more thing that is of highlight here in this case is, if you see this, it's 25%, right? Very few company in the initial startup phase would have this 250 crore turnover. It's a big thing, right? 330% here and 40% here. So obviously this is, you are not paying those flat, like in LLP you are not paying the flat tax. So here first the income come, and then the deduction happens, then you are paying this rate, which is very very which would turn out to be very very less as compared to the total, the salary structure that we have discussed, right? So let's move on to that slide once again. So I've already discussed MAT. MAT is required to kind of uh, fend off those things where the companies were paying huge amount of dividends, right? The company that make huge profits, but they show minimal, or they pay minimal tax. For that, the government has introduced this, right? So it is mentioned here that every company should pay higher of the tax calculated under the following two provision: tax liability on the normal provision, right? And the tax liability on the MAT provision. So higher of this has to be paid. And if I 2019 the MAT rate was where 18.5%, I think in 2021 it was reduced to 15%. So this is how MAT is calculated. So MAT is calculated on something what we call book profit. Now, what is book profit? Book profit is net profit. We already have seen what is net profit. In net profit, there are several things that are added back. So in net profit, income tax paid or payable, if any, calculated, that is added back, transfer made to any reserve, dividend paid, proposed or paid, provision for any subsidiary company. So all this are added back. I don't want to go into detail of this, because then it would make it like, if I explain each of this point, it will be very, very complex presentation. But all this, so your book profit is your net profit, right? Suppose from 1 crore you reach to 10 lakh as net profit, and you are supposed to pay tax on 10 lakh, but then that net profit is increased by this method, right? And if your tax is obviously, because of that, your tax might be, you have to pay 15% tax on that, or 18.5%, whatever that rate is. So if that 18.5% is higher than the tax that you are paid, that you are supposed to pay on 10 lakh, then you have to pay the minimum alternate tax. So that's how the company has kind of tried to deal with people, or deal with companies who have tried to evade the tax. However, there is still a way. The MAT is not applicable for companies which is falling under this section, which is 115 BA. Now, this can be manufacturing companies, service companies. Any company can fall under this. So this was introduced in, I think, budget 2020, 2021, after the, no, this was introduced budget 2020 after the COVID. So I think COVID happened in, so whatever year COVID has happened, I don't remember the exact year, maybe in 2020 or 2021. After that year, the next year, this was kind of introduced, and it was mentioned that the companies which are falling under this, the tax rate is only 22%. It is not even 25%. It is now 22%, and they are not liable to pay minimum alternate tax, which is a big movement. In fact, on that day, the stock market moved up like hugely. I think there was, in Bank Nifty, there was 5,000 point move in a single day. And that candle, or that, that movement is called Nirmala Sitharaman candle, because she is the finance minister, and also she was the finance minister at that point of time. So if a company is under 115 BA, any company can fall under that, so don't worry about that, right? So if, however, if you are falling under 115 BA, there are some deductions that you can claim if your company does not fall under 115 BA, but those deductions are so trivial that I think most of the companies cannot claim those deductions. So most of the company would like to fall under section 115 BA and try to claim this benefit, because this is much better as compared to those deductions which are in any case useless. However, if your company falls under 115 BAB, which are usually manufacturing companies, then they have to pay the minimum alternate tax, right? So usually even the manufacturing companies would try to come to this level, or try to come to under this section where the tax rate is only 22%, and there is no problem of paying the minimum alternate tax, right? Also, there is tax rebate applicable if you register a company as startup. The definition of startup as per Indian context is the company should be in existence less than 10 years, and for any single year the revenue should not exceed 10 crore, right? So then there is, then you can have an additional benefit. Now there is a registration process for startup, etc., which is quite complex. Once again, I don't want to go into detail of this section or that section. Just remember that somehow if you are able to kind of register your company under or justify that your company belong to this section, then your tax rate is 22% only. There is no minimum alternate tax. That, like that, how the government has become chalak, that chalak thing is also kind of removed, right? You, if you are in 115 BA, and there are ways you can do that or achieve that. What does that mean? First of all, that means that business is risky, and not, obviously, it's not everyone's cup of tea. Statistics suggest that 70 to 80% of the business fail in first 3 years of operation. That is because of lack of planning. Mostly the business fail because of lack of planning, and they are not able to scale beyond a particular level. So if you have seen Shark Tank, you will see that most of the sharks try to understand how they can scale the business, right? So that's very important. However, you can survive in a job being a mediocre person. You can be below average and still survive in a job. You will also get promotion maybe later, but you can still survive in job, but not in business. We have seen market leaders going out of business, as for example Nokia, or there was a point of time when Kodak used to be dominate the market for photography, but right now this are not existing. Motorola has gone out of business. So these are the these are the things that we have seen. So if you are mediocre, if you are not improving, you will not be, you'll be destroyed in business, right? Moving on, however, with proper knowledge, persistence, proper knowledge means like you cannot be a paper actuary and be successful in a business. You have to have your own knowledge, own thought process. You need to have your own vision, right? So that is very, very important. So you, if you have worked in a company for years, then you have that proper knowledge, because and you have gone up the ladder using that knowledge, not by buttering your boss. Then you might have a shot at the business. Along with that, persistence is required, because you need to learn how something is going on. Something you believe would happen would not actually happen in that manner. So you need to have that persistence, right? You have to improve every time, like I mentioned. If you are not improving, you will go out of business so soon. And you need a very good team, whose vision is aligned with you, who pushes you when you are demotivated, and who also listen to you, also give you good feedback, right? So if all this four abilities present, or four checkbox are clicked, then business is far, far better than job. In fact, no one is Forbes 30 or Forbes 500 rich people is a working professional. All are businessmen. So you can see that that's what drives the business. That's what drives the world, in fact, or business, right? You have to create a value proposition for someone else, and then they would pay you, right? Initially there might be some hiccups, but later point of time they will definitely pay you. So instead of thinking how you can get paid 1 crore salary, rather than uh, uh, think how you can pay someone 1 crore salary, what business you should be in, so that one day you can pay someone 1 crore salary, because that would mean that you are at a much better position than someone who's getting 1 crore salary. So don't be obsessed with that 1 crore salary figure. Think logically, think based on whatever data points that we have seen. Think from that perspective. Obviously, it does not mean that if you're seeing this video, if you're working, that tomorrow I'll go and say I'll resign and start something. That does not work. You need to focus on all these four areas: proper knowledge, persistence, ability to improve, right? And one of the things that I've seen, that people usually kind of demean job or criticize the job, saying that these are bad thing, you should not be working. Service has come from the word servant. So all these things I have heard, but all these are not correct things. If you, anyone who has built a business, has worked for someone and is supposed to work for someone else again, the financial independence or the independence that we speak about, that there is, I am my own manager, that does not actually exist in practice. There will be people who will always be over you. Maybe it might be the board, it might be the customers. So think logically. Your independence should not be the reason. However, if you can made some difference to a section of people, or maybe to everyone, then you can think of starting a business, provided you have the proper knowledge, right? Just a good idea would not be would not be able to generate enough money for you to sustain. As I mentioned, the most of this business that I failed are very good ideas, but they were only good ideas on paper. They were not practically feasible. So you have to do POC, or you have to do a test run, etc. A lot of things like proof of concept test run, etc. So that you can understand whether your business is relevant, good enough, people actually are inclined to pay for that, because it's very difficult to make the people pay, no matter how close they are to you, no matter how what they say on face, but the real thing they feel inside is completely different. So you have to kind of understand that. But if all those check boxes are kind of ticked, why not go for and you have some sufficient amount of capital, why not go for business? You can do really well, and you can be much better in life, in status, uh, than you are in doing a job. So the final point is, those people who are successful in business are people who have been criticized, are people who have been told that you are thinking. I mean, those are the people who have stand apart from the herd, and if you are like that, then maybe you have a shot at business. But obviously you have to overcome those initial laughter, initial sarcasm, and maybe some amount of criticism before people would start to follow you, and maybe maybe like you for what you have achieved. So first comes the, the brunt of failure or the brunt of sarcasm. Then you can make mark for yourself. So you have to kind of think over those lines. Are you ready for that? Do you have the mental strength? Do you have the team? Do you have the persistence, knowledge, etc.? Can you improve on a regular basis? So if the answer for all of those is are yes, and it is not necessary that the answer would be yes right now. Maybe 10 years down the line the answer would be yes. Then you can go for business. However, it is not necessary that everyone has to be a businessman. Not everyone are not made for business. Everyone is not suitable to do business. Everyone is suitable to do a job though, right? But everyone is not suitable to be a businessman or be the CEO of a company. But if you believe you are, then you have to take that shot on yourself. Thanks for watching this video. If you, as I mentioned, there are a lot of research that has gone behind this video. So if you like this video, please hit the like button. Please subscribe to my channel, and thanks for watching, and see you in future videos.